Welcome to the Real Talk podcast, brought to you by Jamaica Sotheby's International Realty. I'm your host, Tomoya Swaby, and I'm happy to bring to you episodes every first Wednesday of every month. Happy listening. Welcome back to Real Talk podcast, brought to you by Jamaica Sotheby's International Realty. I'm your host, Tomoya Swaby, and I'm happy to bring to you episode 4. This week, we have an amazing line of panelists joining us for another insightful discussion. What will we be talking about this time? It's all about mortgage and investments, home buying solutions for Jamaicans. So, we have with us today an amazing panel who comes to us with insights from the fields of mortgage, conveyancing, and they'll bring all the information that we need. Today with us, we have Mr. Robert Taylor, an attorney at law with Taylor Law. Hello, Robert. How are you?
Hi, Tomoya. I'm doing very well. Thanks for having me.
Amazing. I'm so happy to have you. Tell us about yourself, Robert.
As you said before, I am the founding partner of Taylor Law. We have been practicing since 2008, and real estate is what we do. We do everything real estate, and our main focus is on conveyancing for developers as well as for purchasers and sellers of property. And we'd like to think of ourselves as problem solvers.
Amazing. Thank you so much for that, Robert. Joining us today also is Rannique Foster, Realtor-Associate here at Jamaica Sotheby's International Realty, who is also a mortgage specialist with Scotiabank. Hello, Rannique.
Hey, Tomoya, thanks for having me.
I'm happy to have you, and I'd love for you to tell us about yourself.
All right, so my name is Rannique Foster. I am a realtor with Jamaica Sotheby's, and I also have a background in banking and finance.
Yes.
So I actually do work with Scotiabank as well, one of our largest banks in Jamaica, and I have in-depth knowledge of the mortgage process. And I'm also a realtor, so that just uniquely has me have a good perspective of both sides. So let's see how much I can contribute.
Can't wait to hear the perspectives, and we're so happy to have you today. Joining us as well is Miss Debbie Henry, who is the branch manager of CIBC First Caribbean International Bank. Miss Henry is going to bring us some amazing insights in mortgage and banking, and we're so happy to hear from her. Hello, Debbie. How are you?
Hi, Tomoya. I'm great. How are you?
I am well. Tell us about yourself, Debbie.
Well, as you say, I'm the branch manager at the Manor Park branch of First Caribbean International Bank. I've been with the organization almost 3 decades. I won't go any further into that. Whether you want to buy, build, renovate, CIBC First Caribbean has a solution for you.
I am sure that you do, and I cannot wait to hear all about the solutions that you offer. So let's jump right into our amazing discussion. We're talking about mortgages, and I think this is a big topic for most, if not all, Jamaicans, because a part of the Jamaican dream or the world dream for people is to eventually be able to own a home. And in doing so, the solution for many people will automatically be to source a mortgage. Or there might be people that may want to go the investment route, but we want to delve into what it would take to really go the mortgage route. So, Debbie, my first question will be thrown out to you as we start this discussion is what type of mortgages are available to us in Jamaica? Are there different types? Tell us about that.
Well, primarily, there are many mortgage products.
Yes.
You can purchase a mortgage. You can use a mortgage to purchase a home, purchase land, construct a home, or you can use equity in your property for home equity loans or home equity line of credit.
Okay. So what is the difference? How do you then direct a customer as it relates to the difference in those types of mortgages?
Well, the difference is going to be determined by what you are doing. Mm-hmm. So if you are purchasing a home, it's a straight mortgage. If you are constructing a home, it would be a construction loan.
Okay.
If a line of credit can only be had if you're already a homeowner or you're taking out, someone is offering their property as security, and you're using line of credit from that property to do other types of investment or home equity loan, same type of thing. You're using equity in your home to either to do anything, renovate, purchase another property, or do other types of financing with that funds.
That's interesting. Would you be able to tell me how it is that mortgage rates in Jamaica differ from other Caribbean territories?
I think we're almost aligned.
Okay.
Within the Caribbean, it will range between 5 and 7%. In Jamaica, it's a little, well, that's last year statistics. In Jamaica, we went up recently, so the average is about 8%, 8.5%. But in the Caribbean, we're pretty much aligned.
Okay. Thank you so much for that. I'd like to jump over to Rannique for Rannique to bring some insight to me from the perspective of a real estate agent. What are some current trends that you've noticed with persons seeking home buying solutions in Jamaica within the real estate market?
All right. So in the real estate market, as you know, COVID has really taught persons a lot of lessons.
Yeah.
And most importantly, I see that there's a lot of change going on all of a sudden. As the clients are looking more to purchase property, I think they're really learning from overseas investors and clients. So now they're purchasing properties with what you call it a holding company.
Okay.
So I see a lot of those trends going on right now for estate planning, and that's something that's really good for our country because persons need to understand the benefits for doing a mortgage like that, because our financial institutions do actually support and will process a mortgage for a holding company.
Yeah.
I also see persons looking towards more eco-friendly homes. So renewable energy, big thing in real estate right now. More and more developers are actually selling properties with solar as an option, and so it's even mandatory. So I love to see the direction that our real estate market is going in right now, being as sustainable as humanly possible. So those are just some of the few market trends that I've seen. Most importantly, Jamaica seems to be now going worldwide in terms of its properties. We're going towards luxury properties now. So I see where we're actually one of the top players now, or at least we're rubbing shoulders with the top players. Our luxury real estate market, our higher end market, is now seeing more light and exposure than ever before. So you don't just come to Jamaica for a regular house, you come to Jamaica for a villa, a beachfront property,
lifestyle.
high luxury lifestyle.
Yeah.
And personally, I love that direction, and I think Jamaica Sotheby is leading that trend right now in our market to let local and overseas buyers see exactly what's possible in Jamaica right now and in the future.
I would agree with you. I think I'm seeing that as well, and I would say that our real estate market of real estate agents need to continue to own that in bringing in that kind of investment for sure, because it can only get better and go up for us.
It will.
Tell me though, what do you do in your personal business to make yourself marketable as a real estate agent? Why would I want to come to you with business to say, help me with a mortgage, help me to secure property?
Alright, so when it comes down to real estate and real estate agents, for me, the two most important attributes I or any other real estate agent must have is to be knowledgeable about the market. Real estate is a product and knowledge is key.
Yeah.
You need to know what developments are going on. You need to know how to help a client. Do your client needs a mortgage? Do your client needs lawyers? You need to know what are the comparative analysis, market trends, which property and which areas do better than others, which property and areas are increasing in value at a higher rate than others, because you're not just dealing with persons that are buying to live, you're dealing with investors. So you have to be a very, very knowledgeable individual. You have to read, see what's going on the global and local. Second thing that puts me above other real estate agents as well is relationships. Nothing is more important than relationship in real estate, especially now. There are statistics that show that each person knows an average between 5 to 10 different real estate agents.
Yeah.
So your relationship that you have with some of the persons that I just mentioned, the mortgage brokers, the lawyers, the surveyors, all these individuals, the developer, your relationship is going to put you ahead and, of course, put your client ahead as well in any real estate negotiation. And as a bonus one, I think being social or being out, putting yourself out there, whether it's on social media or at events, is another big plus for real estate as well. I believe that most persons make their real estate decision within 48 hours. So you might be looking for a house for 6 months to even a year, but you typically choose your realtor in the span of 2 days. So by virtue of that, if you are top of mind, insight, persons will more likely gravitate to you, and that's how you get an edge in the market.
Got it. And I'm so happy to hear you mention some of these things because I know here at Jamaica Sotheby's International Realty, these are some of the assets that we preach.
Correct.
And we like to say that we're ladies and gentlemen serving ladies and gentlemen. We like to encourage our agents to be social, get out there and make the connections that will work for them. And it's all about service for us. So great going there. I believe that is something that will definitely bring you to the next level. I'd love to hear from our attorney at this time. And so Robert, conveyancing, oh my gosh, such a brain buster. When I think about it, if I should admit, I don't understand in full and complete totality what really is this process of conveyancing. Tell us about it. How does it work? What is it?
Well, let me first allay your concerns. Land law, real property law, is really a very difficult area. In law school, it has the highest failure rate.
Wow.
Because even lawyers have a lot of difficulty understanding the concepts. Real estate also is steeped in history and land ownership coming out of servants, the kings, and so on.
Yeah.
And really, just to simplify the answer, what we're doing with conveyancing is we're transferring from someone selling land or selling a house, selling land, we're transferring that interest to a purchaser. And so in transferring that interest, we want to make sure that both the person selling, we call the vendor, and the person buying, the purchaser, is protected. And we want to see that the purchaser gets good title, and we want to see that the person selling gets, in exchange for passing good title, they get the consideration, the amount of money agreed for that sale. During that process, we also, as attorneys, have to examine the title to make sure that the title that we're passing to the purchaser has no defects. It's unencumbered. There are no liens, no mortgages. There are no covenants that may have been breached. Because if we have breaches, if we have liens, we won't be passing clean title from that vendor to the purchaser. So a lot of what we do is title searches to determine what lies behind that title, and we also take steps to make sure that prior to any transfer to a purchaser, money being exchanged, that the title is purified. That any encumbrances, any breaches are resolved prior to passing title. Also to make sure that there is title, because we still have what we call common law title in Jamaica on registered land. We also have instances where the title may be lost and we may have to apply for a new title. So there are a number of not just searches, but our task is in negotiating between parties. Many times the realtor will bring to us an offer to purchase and step back.
Yes.
But there's a lot that goes on in keeping that sale intact. What's also common in relation to land purchases is misidentification of land. Someone may see land online, they speak to a realtor, and they purchase land. The realtor may have been shown land, but the land is not the particular parcel being sold. It could be an adjoining parcel.
Yes.
And so there are also steps that we have to take, and we have to advise the person selling and the person buying to protect themselves to make sure that the property they're looking at is actually property being purchased.
Amazing.
So the process is very involved, but for now, I'll give you that encapsulation, and if you need to delve further.
Well, thank you so much for that. I feel like in your explanation, which you did so well, my brain automatically went to what are the potential risks or complications that can happen in this process. And it's really twofold because you touched on misappropriation kind of a thing. Think about scams or fraud. How do you mitigate against these kinds of things in the process of conveyancing?
Well, the first thing you want to do is when you have a seller, is to confirm that the person selling or purports to be selling is the actual owner of the land.
Yes, for sure.
So what we do is we take steps to have identification that's notarized, and then we will do a title search and confirm that the person who has approached us or has asked that we be engaged as your attorney actually has the authority to sell.
Yes.
In some instances, you may have an older parent who owns a property but is not in a position to communicate directly. And so in some instances, we may have or ask for a power of attorney so that the actual paper title holder can convey or pass authority to an appointed person to transact on their behalf. And so we can also take steps to prepare that power, have it properly registered, have it lodged with a land agency, so that that conveyance or transfer of title can take place on the instruction of a third party. Also, in relation to proceeds, when land is sold, we also have to make sure that the proceeds actually pass to the actual seller, the person who previously owned the land. We also have to make sure that the realtor gets paid.
Yes.
So in our agreements, one of the things we...
So that part comes under the process of...
Yes, so one of the things we do in our agreement for sale is actually the last clause. We have the vendor authorize us to deduct from the proceeds the payment of any expenses, any third parties, which includes, in most instances, the realtor, the broker who has assisted them in selling that property.
Okay.
We also need to make sure that when money is transferred, it's actually being transferred. We also, in this new environment, we have to do callbacks to make sure the person sending the instructions and the wire details is actually, those instructions reconcile, because persons will intercept or can intercept emails and insert their own instructions.
Wow.
And so the process is quite involved, and I say to people, the often overlooked responsibility of an attorney. We're managing 100% of those funds, but we're only getting a very small fee. In some cases, 2%, maybe 3%. Some attorneys may charge, but we're managing that 97% of those funds. So we have to have infrastructure in our office to make sure that the client's funds are protected, although our net take is only a very small sum. So it's an inordinate responsibility that attorneys have in managing the conveyance process.
I do believe that, and from what you said, it sounds like a lot of following up and following through and a lot of checks and balances that goes into it. So I do definitely take that. Thank you so much for shedding light there. What is it that you do in terms of advising as it relates to how long it usually takes? So you might have an anxious party. From what I've heard is that conveyancing takes a while. It's not a tomorrow type of process. It does go through a period. So how is it that you set your clients' nerves at ease, for example, and how long does it typically take?
Okay, you have the pre-COVID standards and you have the post-COVID standards, but typically a transaction with mortgage should take 90 days.
Okay.
There are instances, particularly during the COVID period, where resources were impaired. We would extend the closing period to 120 days. For a cash transaction, you can close in 30 days.
Wow. wow.
It's possible to close in 14 days. What extends the period of closing in Jamaica, and for the benefit of persons in other jurisdictions where you have electronic title, everything is being passed and done electronically. In Jamaica, the endorsement is being done on physical paper. A lot of the interaction and the movement between the agencies is also being done by courier. So our bearer and our courier system mimics the electronic system. So the agreement for sale is being signed. If you have an overseas purchaser or seller, you're moving documents by courier overseas. They come back, they're signed, then they're couriered locally to the stamp office. The stamp office may hold them for 3 weeks, 4 weeks.
Okay.
They stamp them, they assess the value, and then from the deposit that was paid, we pay the transfer tax and the stamp duty. The document needs to be passed to the mortgage institution. Mortgage institution holds it. It's collated with all the pre-approval documents, all the documents. A surveyor is involved, an appraiser is involved. And then after all that documents done and the credit has been approved, then we have to not only register the mortgage, but we have to discharge any mortgage that may have been endorsed on the title that the previous person may have had. So one of the challenges with conveyancing in Jamaica is that so many stakeholders are involved in the process. And the attorney, who's the one pivoting and managing the process, has to interact with all of these professionals and agencies and coordinate the movement of the paperwork through the pipeline through to closing.
Yeah, that's so interesting. And I noted that you mentioned passing from your business to the bank. And I wanted to involve Debbie and Rannique here. And how do you work? Is it that in your business you have like designated attorneys that you maybe recommend clients to, or Robert, do you recommend clients to designated banks? How do you cross in your business? Or is it that you have the clients bring in their mortgage lender, or how do you work that out?
We allow the clients to choose their attorneys for their piece of the processing. The bank has its attorneys that does the registration on their behalf, but for the clients choose their attorneys.
Okay. Thank you for that. Still on your topic, Debbie, how do you have home buyers? How do you help them to negotiate the best mortgage terms? So everybody's gonna say, we have the best rates. Rannique, I'm sure over on the Scotiabank end, you're gonna fight with Debbie to say, we have the best rates. Debbie's gonna say, we have the best rates. How do you stand up against somebody saying, oh, but I went to CIBC and they had better rates, and vice versa?
Rates are established by the institution. Clients' relationship may be able to negotiate a reduction based on how long they have been a client. Different things can be taken into consideration, but generally, rates are fixed by the organization, and then depending on possibly products, clients, the relationship with the client, they are able to negotiate preferential rates.
Preferential rates.
Yes.
Okay. Rannique?
All right, so when it comes on to the financial institutions and rates, I think most persons tend to focus only on that little number when there is a much bigger picture at play.
Tell us the bigger picture.
All right, so within Jamaica's financial landscape, most of the financial institutions do have rates that are relatively in line with each other. So what makes one institution better for another client has to do with their particular situation. So for example, banks might have a differing minimum deposit requirement. So some banks might do 100% financing, some might do 95, some might do 75. A local client versus an overseas client, these factors do change. Some banks differ in terms of the term period that they allow. Some banks will work with retirement age, as the limiting factor for the amount of, and by term period, I mean how long you're able to take out a mortgage.
Okay.
Some financial institutions have a set amount. So, for example, with Scotiabank, if you're a client that is 65 years old
Yes.
and you come to us, we will give you a 30-year mortgage.
Oh my
Yes.
God.
And
CIBC, I'd love for you to tell us. Tell us, Debbie, is this the same thing in your bank?
No, we differ, and I'm glad Rannique brought up that difference because we do not think it's in the best interest of the client to go beyond retirement age to have this mortgage carrying at that time. So it is best to try and cover. Yes, at the front end, it will seem in your best interest because your monthly payment is less. But then when your income is reduced, and to be paying a mortgage, it's not in the client's. We do not think it's in the client's best interest. So these are some of the discussion and the understanding that clients need to have when they are making decision as to which financial institution to take. Yes, you're going to be told that upfront until retirement, this is the what look like a huge amount that you have to be outlaying now. But while you're earning, it is best to try and cover your mortgage, and so at retirement you don't have that to think about.
yes, and to go on the same point again, say each and every client is different. For example, the limiting of the term period will limit the amount or buying power that a client has. A client might want to purchase a particular property for income purposes, not necessarily to live. This could have been their second or third property, and they see a great opportunity where they can actually generate income from that property. But based on an increased monthly payment from a shorter term period, they would have lost out on that opportunity. Okay. And this is why I said that when we're in the market space, the loans officer, financial advisor, have to have a discussion with the client and see what is best in their interest. What do they want to do long term? What's their plan? What's their financial horizon? How much deposit can they put down? Do they want to partner with a family member, for example, which could take on the mortgage? So I really want to pinpoint on the fact that each institution really have different policies surrounding each person.
Yeah.
And one person might not want 100% financing, or there might be somebody that needs 100% financing. Banks in Jamaica will go up to even over 100% financing, helping persons to actually furnish their properties. So that's what I like persons to really have a discussion with their banks, ask them what are the fees, ask them what are these small and minute details before they make a decision on one simple number, you know. It's most interest rates in Jamaica, if not all mortgage interest rates, are variable. So persons, you're not going to really have that interest rate for the rest of your life.
Okay.
Right? And COVID taught us that, where all financial institutions would have actually moved their interest rate up. BNS, Bank of Nova Scotia, Jamaica, they were one of, if not the last institution to even move the interest rate, and that would have seen their clients actually enjoying a lower interest rate for a longer time. And the main reason behind that is because we'd have assessed these clients and established that their affordability and moving up your interest rate impacts that.
Okay.
And that would lead to delinquency. So even after we moved our rates, we moved it at a very small amount. So knowing what kind of bank you're working with, what's their culture, how they treat clients, these are the big decision factors. And relationship. Debbie said it, relationship is really important. When you can call your bank and actually get some answers and actually get some feedback, that is great. So again, these are the things that you need to take into consideration when choosing a financial institution.
Thank you so much. Thought came to me in the process, and the thought that I had was, what about cash purchases? How do you guys in your business deal with
someone coming to the table with a cash purchase. So this is now, I have all the money, what goes into screening. So Robert, tell me, somebody comes, they want to buy a property, cash, what goes into your processing of this type of a client?
Okay, good question, Tomoya. I think the first thing we need to distinguish is that when you say cash, you mean no mortgage. So someone's not coming with bank notes.
Yes.
They just don't need a mortgage. So the Proceeds of Crime Act has, and certainly very recently also encompassed the requirements of attorneys to get specific information from clients on the source of proceeds. Mm-hmm. So the first thing we have to do, particularly when there's a cash transaction, is determine source of proceeds, and we have to, ensure that we have our due diligence and know your customer information. The good thing with a cash purchase is that the transaction can, as I stated earlier, you can close it in a shorter period of time. Chances are you'll be able to be a little more aggressive in negotiating terms, not just the purchase price. Certainly if you may want early possession, you may be able to negotiate that because of the strength of that cash. One thing, cash can be a double-edged sword, because with a mortgage, there are certain due diligence steps that have to be taken. The valuation, the surveyor's ID, the title searches that protect the purchaser. In some instances, because an attorney or person handling the transaction may feel that, or the actual purchaser, that it's cash, they can just go ahead and pay that money over to the person selling. But we certainly in our practice insist on the same steps that would normally be taken when a mortgage is being utilized. So the surveyor's identification report, I've heard, in some instances people say, oh, I don't need one, it's a cost. It's a cost that's going to save you a lot of money in the long term. Because if you buy a property that has a breach, let's say a distance breach, someone built a kennel, a doghouse, a garage, an extra room onto that unit. Yes. Buying it cash doesn't affect you now, but when you're ready to sell it, the purchaser more than likely is going to require a mortgage. That surveyor's identification report is going to show a breach. You never had approvals, you're going to have to get the local municipality to approve, and the courts and so on. Okay. So that's one of the double-edged swords with the cash offer. You may think you can go fairly quickly in expediting the transaction, but there are certain due diligence steps that still must be taken. But because you're in more control of that process, you're not going through the bank and so on, you can direct the purchaser to a panel of whether it's surveyors, valuers, and so on. So we can still close in 30 days. Okay. But we make sure that we comply with the same steps that the mortgage company would have done to protect the mortgagor.
Thank you. So Debbie, tell us, in your banking field, what happens? Is this the same thing, similar to what Robert is saying here with the treatment of more cash purchases?
Well, Robert would have more interaction with the client doing a cash purchase, because the financial institution would be holding the funds, and we would be taking instruction where to send the funds, with the attorney holding the funds. Some customers will deal directly with the sellers because it's cash, and then they do not perform that due diligence if they decide, because some persons want to try and save. And so because they have their cash, they want to pay directly to the seller. Yes. But it is encouraged that they still use an attorney. And there are two options. We can either pay directly, issue a letter of undertaking on behalf of the client, or they can have the attorney hold the funds and issue a letter of undertaking and get the same kind of protection from the attorney. It's really up to the client, because there are varying fees, and the customer will use that to determine on their own which method they will use, because they're not using the bank to finance that purchase.
Okay.
So I'd like to just make a quick interjection.
Of course.
As it relates to the real estate agents as well, Robert really hit the nail on the head. When we think cash, we don't do our due diligence. I've always tried to preach myself. So when I have a cash buyer, I tell them that, hey, I understand that it's a cash purchase and a lot of the things aren't necessary, but I do recommend doing a surveyor's report, doing a valuation if you can, have everything go through the lawyers. Try best not to deal it directly with the seller. Have a lawyer and attorney, represent your best interests. You can still do a cash purchase and get it closed in 30 days and still not leave yourself open to some potential harm long term. It's not one or the other, it's both. Also, I hear that we're saying a lot that the banks aren't really involved in cash purchases. We are,
Okay.
very much so. For example, you have two ways typically that the banks will interact with a quote unquote cash purchase. So if you do an home equity loan where you would essentially mortgage one of your existing properties that has some equity in it, that is also a cash purchase. So you're not tied to the same due diligence at the surveyor's valuation for the property that you're purchasing, but the bank will do its due diligence on your existing property. So they'll give you the cash sometimes, well, all the times they'll control the funds and send it over, but that's still considered a cash purchase.
Okay.
Another popular one I see happening a lot, that's also a trend on the banking side. Persons who have the cash in their accounts will purchase the property straight out cash and then come back to the bank and actually mortgage that property after and get the cash back in their hand. So
Is that a best practice though?
I see it being used mostly when high value clients do not want to lose a deal. So if there's a deal that is time sensitive that needs to be closed tomorrow, they will pay the cash up front, let the bank know, and the bank will actually do the mortgage on the back end, refinance back the property, and give the clients back their cash. So we're still very much involved, as you can see, in a few different ways in a cash purchase as well.
That's interesting. I feel like sometimes when you think about cash transactions, it gets scary because people think scams and fraud and is it legitimate? But it's very interesting to know that in your business there is a process that can be
Very
followed
popular
right across the table. So Robert would have mentioned that, and yourself and Debbie. So there is a process. So once you follow through on the processes, that means you're still doing it right. If it is that client is a potential cash purchase. So very happy to hear that and to have that cleared up so that we know that there is that set and complete process. So let's talk a little bit now about pre-approvals and mortgages. People always come with their pre-approval letters or they get pre-approval letters from the bank. Is it a guarantee? Should I get excited when I get a pre-approval? Oh my God, the bank says I can get this $100 million property. I'm so ready. I tell all my family and friends I'm moving out tomorrow. Tell us, is that the case? Can I move out tomorrow? Debbie, see you laughing, so tell me.
Okay. So persons generally call their financial institution when they are in touch with a realtor and the realtor says we need a pre-approval, and so they're rushing and they're not disclosing everything they need the pre-approval now. So you have the basic information that you take, your income, you declare your expenses. You're not necessarily pulling the credit report, and so you're basing your pre-qualification on what the client is disclosing, and you're putting that disclaimer in the pre-qual letter to say based on what you have disclosed, because of the fast turnaround time. So, and then you have the pre-approval where the client is really interested in determining based on my expenses, based on all that I have to do, what do I really qualify for?
Yes.
And so they will sit down. They will start the planning. These persons will start the planning stage. They're going to plan for it. They're going to save towards it. They're going to follow the home buying process, and make sure that they're saving towards what they intend to purchase. You have a discussion about their financial obligations, and everything is taken into consideration. So usually when the realtor gets a pre-approval letter, they're not certain with which one of the processes the client followed in getting that letter, because they both look the same way. One is not saying pre-approval and one is saying pre-qualification, or any distinction like that for us at First Caribbean. So it depends on what was said, what was disclosed, the process that went through to determine the amount that the client can afford. So the client will identify a property with their realtor, and they are ready to start submitting the documentation. And once we get to pulling the credit report and seeing all the undisclosed liabilities that are there, can be challenges sometime in completing the application process. Financial institutions and realtors also need to have a relationship. It's not just the client and the realtor and the client and the banker. It's 3-4 ways that we need to be speaking and having a clear understanding of what is happening, what the client need, what was taken, what is the expectation, so that there are no delays in the process. So that is the distinction in what is out there as pre-qualified letters.
Okay, in light of what Debbie is saying, Rannique, are you upfront with your clients as a realtor associate? Now we're talking to you. Are you saying to the client, let's be very open because we want the best shot at you getting this property. Let's be real about everything. What's your credit like? Do you have those real-time discussions with the client before they even go into the process of seeking their pre-approval?
All right, so 100% yes. Any experienced realtor on the ground will know that assessing your client's financial situation comes second to me personally. I do not like to lead with this. I do first get an understanding of what the client wants, what the problem I'm solving, because I do see myself as a problem solver. Is it that they need to expand? Do they need to downsize? Is it that, we have some persons leave the house, so we need a little bit more of a change of environment? I try to understand what my clients want and how I can assist them with that. Then yes, absolutely, we move into the discussion to see what's the financial profile is like. So the first question we would ask our client is, do you plan on, what's the timeline for this purchase? Is it that you're looking to purchase a property right now, you are ready, you're on the ground? Or is it something more of a long-term thing you're looking at, 1 to 3 months, 3 to 6, or a year time? Based on what their answer is, I start to understand if, they're saving towards it. Have they accumulated a deposit as yet, or are they just starting that process? Once we establish that, we say, okay, so what's the financing going to be like? Is this going to be a strictly cash purchase?
Yes.
Are you going through the mortgage process? Have you gotten a pre-qualification letter as yet? Some clients would have gotten a pre-qualification at some point in time. Some persons might have their pre-qualification right now, ready and waiting. Great. Some clients don't even know what a pre-qualification is.
Wow.
And that's where the relationship comes into play. If the clients have a financial institution that, if they're salaried, or if you're not salaried, self-employed as well, where their income is coming through, usually that's the best institution to go with. I also would ask the clients, what their age is, just to get an understanding. For example, if they're an overseas client, based on the different financial institutions, the deposit requirement is higher or lower. So I take all these things into consideration when I recommend to them a mortgage institution to actually work with. So that's where the relationship comes now. I can call somebody from a financial institution, probably add Debbie to that list and say, Debbie, I have a client here. This is the situation. I'd love to have them get a pre-qualification, do your assessment, and I'll do a warm transfer over to Debbie and her location to see what they can do for my client. And hopefully it's not just a yes or a no, it's a yes. If not, it's a no, and this is what we're going to do to get to that point where you can qualify for what you want. So that's pretty much how it's incorporated in my conversations with my clients.
Is that the case, Debbie, where you say it's a no, however, here's a solution to the problem?
We always try to find a solution because the intention is for all Jamaicans, each person that has an interest in owning a home, to find a way to own a home.
Yes.
And most persons cannot do cash purchase. So financial institutions are needed to assist persons in home ownership. And so that conversation is very important. Rannique went very well into the 3 months, 6 months, 9 months, a year, what is your property? So usually persons are looking at short term when they include their financial institution. They're almost ready. And most persons sometimes identify a property, and as Rannique said, they have not been pre-qualified. And unfortunately, they may find out that they have been looking at $50 million properties when the pre-qual is coming out at $20 million, and persons are extremely disappointed.
Yes.
And so we have to keep the conversation going and start it early, because we know that most persons are dreaming about home. So when persons talking about cars, you're talking about home ownership. What you should be doing, should you be buying this value car, or should you be buying another vehicle and putting some away for home ownership? You start introducing clients early so that the process is easier. And it's never too late. We just have to be willing to make that sacrifice. Or too early. We just have to be willing to make that sacrifice. And so we discuss the options with the clients.
Amazing. I'd love for us to talk a little bit about investments as we bring things down. So usually we hear that, investments tend to be a little bit different from, banking. Like, there are investment companies, there are banking companies. Robert, do you in your business do anything along the lines of investment? Some client might come to you, they want to do some developments. What is your process and conversation like? They want to put up a multi-million-dollar development in Kingston, for example. How is it that your company or yourself guides?
Well, we're not licensed financial advisors per se, but certainly as attorneys, there is a certain range and realm within which we can delve. Incidentally, I was a vice president at Citibank for 11 years.
Okay.
And so in my prior life, I was involved in corporate finance. So I also bring that experience to our practice. And in fact, many of our clients are developers who need a broad scale of advice in assessing the viability of a project. So I generally put that hat on. And I'll use that to help structure a transaction. So a developer may need to do a joint venture with a landowner. So we have to put that agreement together and determine what aspects of that structure suit the developer financially. We have to determine what value do we input that land in for the equity. Let's say it's the person contributing the land.
Yeah.
There are also other possibilities. Rannique spoke earlier about purchasers who may use cash initially. There's also the concept of arbitrage, where a person may hold cash and they may place that cash in an interest-bearing investment, let's say a bond, and that bond may be generating 7 or 8%. And they may choose to secure a mortgage with that bond. So if they're paying 7 or 8% on that interest for the mortgage interest rate, and they're earning 7 and 8% on a bond, then their net cost is zero on that purchase. So there are also some more sophisticated investors who will use their cash to do that. or they'll have a US dollar investment and they'll purchase with a Jamaican mortgage because although mortgage interest rates in Jamaican dollars are trending, the differential is above the US rate. Historically in Jamaica, the Jamaican dollar depreciates against the US dollar.
Yeah.
So what an investor can do is expect that the same dollar he earns in US dollar over time, he will require less to pay that Jamaican dollar mortgage. So those are some of the things that we look at when we're having these kinds of discussions with our clients. So yes, at the end of the day, when we're looking at investment, it comes back to yield. So what's my return? So many times an investor may look at property and property may not generate more than a 3 or 4% return. And we say, does that make sense? Why not buy a bond that's an investment grade bond, virtually risk-free, that's generating 5-6%?
Yeah.
So those are some of the considerations when we look at investment. So we try to not, make ourselves out as advisors, but certainly I try to wear my prior hat and provide that kind of broader scale of exposure to particular clients. And I mean, I could go on and on at some of the options, but let's stop there for now.
Thank you so much. Yeah, that's such an interesting take there. So, Rannique and Debbie, I want to throw this out collectively. Do you guys have investment arms to your respective banks, or is it something that's handled under your arm? If it is that someone comes to the bank and says, I have all this money, I'd like to invest in development, or I want a vacation home, how is it that you treat or handle those kind of conversations? You pass it on to the investment arm if there's one, or do you handle it within branch?
Okay, if a client approaches us for development, we warmly, as Rannique pointed out, that is transferred to our corporate arm to deal with developments.
Okay.
On an individual basis, the term will differs when persons are purchasing property as investment property. For residential, it can go up to 95% at CIBC First Caribbean. Once it's investment property, we are going to go to a maximum of 80%. Now, if the individual is using rental income as the repayment for the property, we're going to be discounting that. If you're a salaried employee, all your income is taken into consideration against your liabilities. But if it's rental income on the property, we're going to be discounting that because the expectation is not that the property won't be rented all the time. So that is discounted to take in as the income in consideration. Also, so it's existing income that is taken into consideration in financing an investment property, and not what you expect, because there is no precedence. There is nothing to show that this property has been rented, will be rented, and so will be able to use the income from that property as repayment of the mortgage. So those are some of the things that we think about when we're talking about investment. So it's not just about having funds and investing that. Yes, we do that, and you can use your funds as security and purchase, as Robert said. But there's also the side where you are buying an investment property. It can be from a mortgage. It can be from having those investment, and the terms are different when it's residential versus investment.
All right, so yes, Robert and David really explained it well. When a client comes to us for investment, just to answer your question first, is yes, we do have a separate arm for that.
Okay.
Scotia Investment, and that's for your conventional investment instrument, vehicles, bonds, stocks. It does get very complicated very quickly because you can be very savvy, like Robert says, and layer different investment instruments on each other. So yes, We do have an arm for that, and we do a warm transfer over if that's what the client is looking for. In most cases, however, clients come to us and say they either want a property to live, lay down every single night, they're growing their family, this stage of life, or clients might say, hey, we want an investment property. So typically when clients say they want an investment property, they're pretty much looking for something that they can use. They're not going to be at the property living on a day-to-day basis, or they might come to the property on their off seasons. So when they want a vacation, which is very popular among overseas clients, because that really saves them some money on hotels and Airbnb, while still generating income when they're not there. So on the real estate side of things, when a client comes to me and say, hey, I want an investment property in Jamaica, really what I look at personally is what kind of returns do these clients want. I have to identify different areas, look at trends. Jamaica's tourism market is booming right now. We're reaching and surpassing pre-pandemic levels.
Yeah.
A lot is going on in certain areas of Jamaica, so you factor in which locations are doing well. There are actually a lot of tools available to realtors and other persons. We can use MLS, for example, and see rental data to actually do an analysis on which areas get the highest rental income. So you get that broad, deep analysis when I'm dealing with my clients to identify which area, which type of property, whether a villa, 1 bedroom, a 2 bedroom, what's going to maximize their return and also maximize their comfort. So in that regards, yes, I do help to give my clients that advice, let them know that I have the expertise to assist them in whatever they're looking for. Like I said at the beginning, it really comes down to knowledge, knowing your product, knowing your real estate market, and having the right relationships.
Great. Thanks so much for that insight, Rannique. And as we come to a close and wrap this amazing discussion up, it's truly been a fabulous one. I certainly have learned so much about the mortgage and investment space, and yourselves as panelists have made it all the more better. So, Robert, Rannique, and Debbie, thank you for having joined us on the Real Talk podcast. This is episode 4. It's all about mortgage and investments, home buying solutions in Jamaica. My name is Tomoya Swaby, and I've been your host.